This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Sky-high refining margins for diesel and gasoline in Europe and the United States, driven by a cut-off in Russian supply, has sent prices for some types of physical crude oil to all-time records according to traders. The dearth of fuel in the major consuming countries just as the summer driving season in the United States kicks off has lifted asking prices near and above historic peaks for lighter and medium oil types from West Africa to the North Sea. The sharp rises underscore a tight market and the difficulty of bringing down transport fuel costs, which have thrust inflation toward 40-year highs and triggered recession fears in the United States and some parts of Europe.
EU countries failed to agree on a Russian oil import ban despite last-minute haggling before a summit got underway in Brussels on Monday, exposing a struggle to widen sanctions on Moscow over its war in Ukraine as the economic risk for Europe grows. The leaders of the 27 European Union countries will agree in principle to an oil embargo, a draft of their summit conclusions showed, but they will leave the practical details and hard decisions until later. The EU has rolled out 5 packages of sanctions against Russia since the conflict began more than 3 months ago, demonstrating uncharacteristic speed and unity given the complexity of the measures.
Moving on to the top news in the energy sector.
Oil prices climbed above $120 a barrel on Monday, hitting their highest in more than 2 months, as traders waited to see whether the European Union would reach an agreement on banning Russian oil imports. The Brent crude futures contract for July, which will expire on Tuesday, was up 69 cents, or 0.6%, at $120.12 a barrel at 13:10 GMT. The August Brent contract, which is more active, rose 85 cents, or 0.7%, to $116.41 a barrel. U.S. West Texas Intermediate, WTI, crude futures jumped 74 cents, or 0.6%, to $115.81 a barrel, extending solid gains made last week.
The U.S. Environmental Protection Agency, EPA, issued an emergency air quality waiver through June 6 to boost supplies of gasoline in East Texas after production was cut at a regional refinery. The waiver allows the sale in 34 Texas counties of higher volatility, winter-grade gasoline. The Biden administration has released emergency oil stocks and is considering lifting smog rules nationwide to combat rising fuel prices. Waivers typically are issued after hurricanes or other disasters that broadly cut fuel supplies and not for outages at a single refinery as in the Texas case.
Next, we have the top news in metal markets.
Dwindling stocks in London Metal Exchange registered warehouses mean wild price swings for metals such as copper, tin and zinc are likely to be a feature of the market for some time. A manufacturing revival after COVID lockdowns were lifted last year caused demand to soar, particularly in top consumer China. The shortages that followed led to the depletion of stocks in LME warehouses. Prices have retreated recently due to slowing activity in China, where coronavirus lockdowns have again hit activity. But as demand picks up and the spotlight falls on deficits and stocks, volatility is expected to resume, though it will be tempered by new LME rules that limit daily moves to 15% and price differentials between 2 contracts.
Iron ore futures in Dalian and Singapore climbed on Monday to their highest levels since May 23, extending a relief rally spurred by easing COVID-19 curbs in top steel producer China and government efforts to shore up the battered domestic economy. The most traded September iron ore on China's Dalian Commodity Exchange jumped as much as 3.9% to 887 yuan and 50 fen, $133.16 a ton. On the Singapore Exchange, the steelmaking ingredients most active June contract rose as much as 1.7% to $135.30 a ton. We will now look at the top news in the agricultural sector. India has received requests for the supply of more than 1.5 million tons of wheat from several countries that need the staple to overcome shortages triggered by the invasion of Ukraine by Russia, trade and government sources said on Monday. More than half a dozen countries have approached India for more than 1.5 million tons of wheat, and we will see how to go about these requests, said a government official who didn't wish to be identified in line with official rules. India is keen to help vulnerable countries and anyone who needs wheat, said the official involved in decision-making.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.